Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, September 27th, 2023. Before I click through the charts, as usual, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Please share the content, if you would, with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those underlying stock picks. And we offer a 5-day free trial up front. So you can check out everything I just mentioned, including this week's two stock picks and all the recent ones for no cost at all. Just sign up for wickedstocks.com. Check it out. If you like what you see, you stay on. If you don't like what you see, you can bow out at no cost to you whatsoever. So let's check out the charts. Big picture, work our way into the day itself. Just a reminder, we may well see this level this week, perhaps. 167.83, long-term channel top. We settled above last May, set off a long-term buy signal that remains in effect, at least the possibility for longer-term bullish continuation. My opinion is still bullish well into next year above 167.83, still anticipating at some point this 227.68 rising channel top. Now, I say that right now. I have no strong conviction in it in terms of nearer term. I'm talking like, between now and the middle of next year, unless we were to get up and over some key resistance levels. And I can actually show those to you, the most notably 189.80. First, we got to get above 178.97, this new descending channel top on the daily chart. That should mark a good low into later October, possibly through October. The following 2 to 3 weeks, then likely to test 189.80, where we could actually top out on a monthly basis and fall off. But it would be a settlement above 189.80 that would indicate longer-term bullish continuation. And under that scenario, you've got 220 is actually off the chart here, but it would be considered, I think, a 3 to 5 month objective if we close above 189.80. I think that would be realistic. So that is the magic number right now, 189.80 for the long-term target. Until then, let's put it this way, there's going to be a variation of this channel top. Assuming we slip into the upper 160s, 167.83, even into the mid 160s, it's going to be in the 180s. So if we test this 167.83 down to 164.37 region, you may consider reaching for 185 or 190 out of the money calls that don't expire for at least, I would go at least 3 months out. I don't think that rally would take 3 months. I think it'd be more like, 1 to 2 months, but you might even go 4 or 5 months out on that just to preserve delta on the way up. This daily chart shows you a pretty good image as well. 164.37 is pulling away from 167.83. It is quite stair-step right now. I like it when things line up. I don't like it when it's just, long-term support at 169.94, long-term support at 167.83, longer-term support at 164.37. It's like, which one do you pick? And there's no right answer. I think this market can be bought all the way down to 164.37. And quite honestly, as we push into later October, it's going to be a convergence between the speed line and this channel bottom. So what would indicate that? That would be a weekly settlement Friday back below this, you could also call it, this is, say, 167.83 by a 1% margin, which would also involve this intermediate channel structure at 166.41. I think that is your sign to no longer bottom pick the market. Near-term traders are playing the short side into really the upper 150s, 164.37 dropping, 157.89 rising. I know I'm getting ahead of myself here, but I know some of you are wondering what if, and the what if is if we close below 167.83 by a full 1% margin, I think you can expect the upper 150s within a week or two of doing so. It is quite stair-step all the way down. 169 94, you can see here, is a longer-term 3/8 Fibonacci from the January low against the July high. That's a respectable support level in itself. I've reduced it from multi-week to just weekly support. We may see that level today. Keep that 169.94 level in mind. We actually show it here represented. 171.96, the August low, we closed actually right at it on Tuesday. And so it is a soft intraday pivot point, 171.96. And if we open below it, or if we break or open below it, 160.94 I think is likely today. We may place a weekly low here. If we break 169.94, a 167.83 is attainable today, as you can see, and that would then wind up testing this long-term channel top. Now, 169.94, I wrestled with the whole idea of just reducing it to a session containment level, and I may actually do that through the rest of the week. But for right now, for familiarity's sake, we've been talking about it for a long time. I'll leave it as a weekly support level, but if you want to be a little extra cautious here, I think that's pretty good advice. I do think this market wants to test 167.83. As I've been saying, holding below this channel structure at 178.97 will keep selling pressures building as we move into October, with the 167.83 level in reach as like a 1 to 2 week possibility, and that possibility is probably more now a probability as we move into later week and early next. So this is your solid zone to buy into. If you're short, I would suggest covering at least some of those shorts. If you're not positioned at all, this is a beautiful area to buy into for going long as we move through the rest of the year. Let's talk upside today. I've got 173.94. I do believe I show it somewhere. Bear with me. There it is. No, it's not. There it is. No, it's not. I'm sorry. I thought I had a line coming across the bottoms here at 173.64. So the way I'm framing the day is we're heavy below 171.96 if we open below it. And we really don't turn bullish into the afternoon unless we push above 173.64, which is nothing more than a trend line off these lows. This is a decent day ceiling in and of itself. If we push above 173.64, I'm sorry, 176.02 in reach. So below 171.96, 169.94 is likely. Above 173.64, 176.02 is likely. 176.02 can contain daily buying pressures, and we might even fall off from here into later week. If we close today above 176.02, expect a test tomorrow of 178.97, where we can place a weekly high and perhaps fall off into next week, because below which, as I've been mentioning, that 167.83 formation remains a 1 to 2 week target. Finally, and I said it earlier, if we were to close above the 178.97 formation, it's not going to happen today, but it could happen by Friday's close. We've got a good low through October, the next 2 to 3 weeks, then likely to reach this midterm resistance at 189.80. I think I've summed it up pretty well. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Thursday's Apple Report, and you have a great day.